Hello, MarketClub members everywhere. Jeremy Lutz here with your midday market update for Wednesday, the 16th of January. And I just want to start off by saying, and I'll highlight it right here, make sure you tune in today, 3 p.m. Starting at 3 p.m. Adam Hewson will be on Bloomberg's, so I think it's Moneymakers, or it's actually at 3 p.m. with Trish Regan for a roundtable discussion. He should be on there. He's going to field some questions and have a lot of great information, so make sure you tune in to watch that at 3 p.m. Eastern Time today. And with that, we'll talk about what's going on in the markets today. It looks like concerns about the global economy are weighing on the markets after the World Bank cut its forecast for global economic growth in 2013. World Bank said it now expects the global economy to expand by 2.4% in 2013 compared to its June forecast for 3% growth. Estimates suggest that the global economy only grew 2.3 in 2012, so it's kind of weighing on the markets today. But on a positive note, a report from the Federal Reserve showed a slightly bigger than expected increase in the U.S. industrial production in the month of December. The report showed that industrial production increased by 0.3% in December following a revised 1% jump in November. Economists had expected production to edge up a mere 0.2%, so a little bit better than they thought. The increase in production came as a mining output more than offset the sharp drop in utilities output. And a separate report from the National Association of Home Builders showed that home builder confidence held steady at a 6-year high in January, while the Labor Department said consumer prices were unchanged in December. So you got a little bit of a mixed bag of news there. The global economy is definitely taking the forefront and putting some pressure on the markets today, while some local news, but a little better, but not real great, is kind of holding the sell-off at bay for the moment. And with that, let's take a quick recap of where the markets are today, starting with the Dow. It's actually plus 60, down a little bit yesterday from plus 7. You can actually see currently down 0.27%, about 37 points. Not a whole lot either way. It's been a little bit farther down than that, a little bit higher at the open today. Moving along, the Nasdaq still plus 55 in a trading range, so we're in the sidelines across the board, as all the monthly trade triangles still red, weekly's green, red is daily. I said currently at plus 55 right now, plus 0.11%. It's probably due a little bit to Apple's having a little bit of recovery back over the 500 mark today, and as you know, the Apple weighs heavy on Nasdaq. And if you tuned in yesterday, you actually saw Adam. He thinks Apple's going to head as low as 450, maybe a little bit lower than that. So we'll have to see if that rings true or not. The CME's plus 100. That changed the other day when we had this new monthly trade triangle on the 10th at 1470.96. Currently trading a little bit below that level at 1470.80. So it's been 4 days. It's just kind of flattened out here, kind of hit that peak. Everybody was looking for it to bust through that 1460 level, 1470 level. I'm sure there it is, but kind of holding steady pace right now. Plus 100. We're long on intermediate, long-term, and short-term positions. Euro USD still plus 75. We're still bullish this market on the long-term and intermediate term based on a green monthly and weekly trade triangle. However, daily trade triangles signal an exit from a long position for short-term traders today at 1.327. And there you can see it on your chart. Today, 116 exit this price. And now short-term traders trading Forex are on the sidelines based on that exit signal. Gold still negative 55 in a negative trading range. Sidelines mode. Long-term and intermediate term, we're still short this market based on this entry point at 1672. 400 currently trading at 1682.70. A little bit of a loss there, but not too bad. But again, long-term, we're still expecting gold to go down for the foreseeable future based on those long-term trends. Short-term traders are on the sidelines basically about a week ago, exiting at 1662. And again, negative 55. So it's on the downside of the sidelines trend there. Silver is actually up to a plus 70. We had a new weekly trade triangle yesterday. 31.43, signaling an entry for short-term position for short-term traders. Intermediate and long-term are on the sidelines based on this exit signal. And actually, long-term, you could still be short this market based on the monthly signal if you're just following the monthly. So plus 70 on silver. Move on to copper. So it's plus 65. Intermediate and long-term traders are still long this position from 355. We're currently trading at 3.60. However, short-term traders on the sideline based on this exit about 4 days ago. Currently trading at plus 65. Crude oil is kind of it's made a run up. It's kind of flattened out the last couple of days. Currently trading at 94.11. I saw a report today that U.S. oil inventories dropped by 1 million barrels. May have something to do with the price going up a little today. Still plus 60. Long term, we're still negative this market. Intermediate term, we're in the sidelines, and short term, we're actually long in this position from 94.29 that we entered yesterday right here on this green daily trade triangle on 115. Getting entered long at 94.29. And we'll wrap it up real quick with natural gas. Currently negative 65. This market hasn't really seen any kind of correction off these lows. It's just kind of bouncing along in a sidelines trend. Long-term, intermediate term, we are still short this market based on a red monthly and red weekly trade triangles. Short-term traders, however, are on the sidelines most based on this green exit at $3.28 back here on 111. That was an exit to get out of your short position for a short-term trader. And let's go kind of go into the homepage here. I'll just remind you again, make sure you tune in today, Bloomberg TV, 3 p.m. Watch Adam Hewison on a roundtable discussion of the markets. And take a look, let's just see if we got anything in here today for a monthly trade trial. I looked earlier and there really wasn't a whole lot other than some real small penny stocks. And still kind of holding true. Actually, we'll take a, what's this, ABBV. I'm not sure what that is, but we'll just take a real quick look at it. It says we got a new weekly high and a new monthly trade triangle. So we'll take a look here. And it actually doesn't even really look like there's a whole bunch of data on this, so we're just going to have to avoid that for the moment. Looks like a fairly new company, new symbol trading. And we actually have Accretive Health here, plus 100. And there we go. Looks like it's got a new monthly. We'll see if this chart looks any better. And there we go. You actually see got a new monthly and a weekly here. I'll actually back this up 6 months. Weekly yesterday at 11.97, and we got a new monthly today at 12.68 to enter a long position. Looks like fairly good volume. Plus 100, maybe a stock you want to take a look at, do a little research on. Looks like with the MACD kind of crossed over and busted out to the upside, so that's nice. I always like to see that myself. And with that, we'll wrap off today. That was your midday market update. Every success in your trading day. I believe Adam will be back tomorrow. We'll see how his trip to New York went and how his visit on Bloomberg TV today at 3 p.m. Make sure you tune in. We'll see you tomorrow, and every success in your trading day today.